think everyone gets into trading, maybe without even realizing it, for the excitement. Because what is more exciting than sitting in front of a screen and making money pour out of it? Trading should be boring. My trading is boring. I don't get a kick out of my trading. Just start by focusing on doing one good trade a day, following the whole process. I don't go looking for trades. I just analyze. I throw fibs on there, I throw trend lines on there, and I look and I look and I look. Chasing the money doesn't work. Planning your trade and trading the plan does work. And the reason I'm a trend trader is because...
Welcome back to the Edge Builder series, where we take some of the best traders in the world and dive into how they create an edge. So my guest today is a 40-year trading veteran and former life trader, Mr. Jason Sen. Jason, welcome to the show.
Com, good to see you again, my friend. I'm getting to know you very well lately.
Yeah, we've been on quite a few interviews, and I think quite a few more going forward now. Even one in person, which will be be interesting. Yeah,
you're buying the beers when I see you then.
Yeah. Yeah. So, I mean, the whole focus of this kind of shorter program is I kind of look behind the curtain on how traders that have lasted the test of time go about their every day and creating those high probability moments. And I know you're one for those kind of high probability areas on charts, particularly technical analysis type approach. So to start simply, how do you create an edge in the markets?
Okay, well, from a technical perspective, I'm a technical trader. It's very simple. It's very basic. I'm a trend follower, so I'm looking for a bull trend or a bear trend. I'm looking to buy at support levels in a bull trend, sell at resistance levels in a bear trend. Dead simple. I mean, obviously, it's slightly more complicated in identifying those areas of confluence, but cable is in a bull trend at the moment for 2025. So we had a decent area of support there recently. And yeah, as a trend trader, if it hits the support level, you have to buy it. And that's it, really. That's your strategy. You can't, shall I wait? Shall I get a confirmation signal or any of that? That's it. My order's in. I walk away. I wait and see if I get hit. I don't chase it. I don't sit there with my finger on the trigger, deciding whether or not to do it. It's all pre-planned.
And so when we have that pullback into, say, support, is your support in the form of a kind of technical level, like an actual support level, and you just, as the trend kind of slows, ready to expand, you look for one of those levels?
Yeah, that's basically it. So I use a combination of Fibonacci, moving averages, trend lines, price action, and patterns. If there are patterns, might just be something simple like a bull flag. I'm looking at the 1 hour, the 4 hour, and the daily chart mostly. Probably, I would say 4 hour is my go-to chart, usually, depending on whether there is a substantial enough trend. At the moment, there are not great trends. So a lot of the time I'm drilling down into the 1 hour. I don't tend to go shorter term than the 1 hour. I don't trust the signals so much.
So you have a kind of a multiple time frame layer on top of it.
Yeah, you kind of have to if you're a trend trader, because as I said, you could be looking at the 4 hour chart and it's just not really doing it. I mean, if you look at the 4 hour chart for gold, on a 4 hour chart, you can go all the way back to April in gold, but we haven't done anything since April. We're pretty much trading exactly where we were in April. We're in the middle of the range. So if you actually want to see where the trend is in gold, you have to go to the daily chart or the weekly chart. Not that it would do me much good at the moment, because as I say, we're stuck in a range and I'm struggling with gold, but you've got to be aware.
Yeah, you're not alone either, because I've found that gold trade just quite hard. It's like, okay, some higher time frame trend indicator might go bullish. Yeah, you've got momentum, and then all of a sudden momentum flips and you're back in the range and you don't get anything. So are those type of trades you just try and, I guess you just get stopped out, or you just try to wait for, I guess, what do you do when we're stuck in a range as a trend follower?
Well, I look at 25 to 30 markets a day. So as Forex goes, I try to stay away from the ones which are just not doing anything. I will admit
Mm.
that gold is my favorite market. So I am actively looking for trades in gold, and I'm not doing that in other markets. I have the luxury of just, I suppose my approach. So as you know, I have a service where I have a technical analysis based signal service. So I don't always trade for myself, and I'm becoming, you know, when you provide a service like that, you sort of feel obliged to find signals for people because they paid you some money to do it. But I've really lately been more like, listen, part of what I need to do is tell you when not to trade. It's so important
Mm.
knowing when not to trade, and you know, a lot of people say some of the best trades that you do, that you are the ones that you don't do, that kind of thing. You know, capital preservation is so important. So, but I must admit, in gold, I'm drawn to it, and I look for trades. And at the moment, I'm on the 1 hour chart. I've got Fibonacci levels all over the place, and trend lines. Of course, moving averages are no good, really. Well, actually, the Fibonacci levels aren't very useful on a 1 hour chart, but and I'm just scalping it. I'm scalping it for $10 or $15. There's nothing else you can do with it. I don't like sideways markets. We've been seeing a lot of that in recent, not just recent months, but recent years. I suppose it's forced me to get better at trading sideways markets. But as I said earlier, what I do is I look at 25 to 30 markets and I'll cherry pick. I could look at 25 or 30 markets a day, and I could sometimes only find 6 or 7 opportunities. And
Mm.
of those 6 or 7 opportunities, 2 or 3 might only actually execute. Now, if three execute and 2 are winners, I've had a great day. But it's taken me 2 hours to identify those opportunities. And as I said, I stick resting orders in. I'm a levels trader, so I'm not looking at, okay, I think gold's going up today, so I'll buy some and see how I get on. You know, I mean, I don't believe that that's the way you should trade. I'm not a
Mm.
directional trader, although I'm a trend trader. So I'm looking to buy in a bull trend. I'm not buying because I think it's going up. I'm buying because it's reached a level where I think that I have an edge. I think that there is a greater than 50% chance that the market will bottom here. And I'm pretty good at that. You know, I am pretty good at that. My hit rate on that is, I don't know what it is, but it's definitely greater than 50%. And then if I do that and I'm prepared to risk 30 pips to make 60, 90, or maybe a bit more if I'm trailing my stop, that's it. You know, the maths works.
Yeah. Yeah, I think, I mean, but your approach is so grounded in things that, like trend following, I think works because it's grounded in that human emotion. I think levels work, whether they're, I know you kind of align multiple confluences, but lots of FX traders especially use, or big FX traders I know, use levels as like just big areas that the market is identifying as an area of interest. So, you know, even said, I'm trying to get better at collecting data as well. I think, I don't know if I'm a bit lazy or something, or, but
Oh, I am.
I think what you do is so grounded in things that works. And as you said, the market is always changing. Sometimes running to a back test to kind of assure yourself that this is okay. I found I do that exercise sometimes when I'm looking for extra assurance or something, and then I end up really just maybe even changing the strategy or just trying to get away from the fact maybe I've had a loser and I'm looking for self assurance. But in reality, yeah, as you said, conditions change, and you have to be kind of nimble.
You do. And you have to be honest with yourself. If conditions appear to be changing and you think, I don't know what's going on, be honest with yourself. I'll write to my subscribers and say, I don't know what's going on today. I'm
Mm.
just not seeing anything that I would get my teeth into. And I have no problem with that. I think it's really important. You know, less is more when it comes to trading, knowing when not to trade, knowing, you know, I don't chase markets. If well, as I say, I put resting orders in anyway. But if my order doesn't get hit, if I miss it by a pip or two, I'm not chasing it. I'm hoping the market comes around and retests the level and I get in. But if I miss it, I miss it. I'm good with that. You know, chasing the money doesn't work. Planning your trade and trading the plan does work. And the reason I'm a trend trader is because I spent months, probably years, if I'm honest, doing stupid things like selling the stock market because it had gone up so much. I'm like, oh, it's so overbought. It can't keep going up. You know, I'll start selling it. And I just got murdered. I lost tens of thousands of pounds shorting rising markets. And in the end, I don't know why it took me so long to figure it out. I'm not that smart. And I just went, what are you doing? It's going up. Just buy it. And now I don't even think about it. It's in a bull. I'm still. I think stock markets will still going up. Will still go up. People are saying, "Oh, they're overbought, they're overpriced." Yeah, probably, but that doesn't mean they don't go up another 10%. I've seen it too many times.
Yeah. Yeah, I think there's a great, I think that all of that comes with your many years of experience. I mean, number one, being able to identify when you shouldn't be trading, I think is such a big thing. And it does take a lot of time to develop that. Like I know I struggle with that massively, or just people with less years on just, having to have a trade or something. I mean, the best traders I know just know when to just sit on their hands and wait. And the other thing is that the kind of humility you have in saying the market's going up, I'm going to buy it, because the alternative, as you said, when people call, the market overbought, it's basically saying, I know something that the market doesn't know. I think it's overbought, even though it's going up. And I
You're
think
so
that
right.
there's a lot of wisdom in what you just said of,
Mm.
saying it's going up, just buy it. I mean, it sounds simple, but in reality, you're saying I agree with everyone's opinion in that moment, which
That's a good
oftentimes is
point.
probably, yeah,
That's actually a really good way to verbalize it. I agree with everyone else's opinion at the time. Yeah, just go with the momentum. You know,
yeah,
it, the thing about, okay, the other thing I learned about selling into bull markets, for example, is you can pick the high of the day. Imagine if you sold the high of the day, you would think, whoa, this is an awesome trade. I'm going to hold on to this trade. But the problem is, you can sell the high of the day in the stock market and it'll go down not much.
mm,
The dips in bull markets are just not that deep. So even when you get the most awesome entry, your profit potential just may not be there. And that's why it's just too hard.
yeah. Yeah, and when you don't get that payoff with that
Yeah.
when you do pick the top, it's like, and I find the opposite with trend following is like you might not get the perfect entry, but the kind of wave lifts you, and then it can go quite far, which is nice.
Actually, that's a really good point. You don't need, if you're shorting into a rising market, you need a perfect entry. If you're buying into a rising market, you don't need a perfect entry, because eventually, yeah, it'll turn around and you'll get saved as long as your stop's not too tight, as long as you're not trading size that's too large, so you're keeping a tight stop and you're being greedy, that kind of thing.
Mm, yeah, very true. And how long did it take you to, I guess, come to your current approach? Because I said you've been in markets for a long time, and like most people, didn't start where you are now. So, at what point did you develop this kind of trend, very market aligned levels type approach?
Um, Probably about 15 years ago. I've been doing technical analysis for 20, 25 years. So it was more than 15 years ago. I mean, as I said, I was honest with you. It was probably years of me continually trying to short the market. Um, okay, it wasn't 5 years, but it was, maybe a year or two, and I just couldn't help myself. So yeah, a long time. And I'm in the luxurious position where I'm coming to the end of my trading career, and I'm lucky enough that I don't need the money. So I can afford to sit back and say, I don't mind if I miss a trade. But you know what? When you don't need to trade, when you don't need the money, if you're not forcing it, it makes trading so much easier than when you're like,
Mm,
I've got to make 100 quid today. I've got to pay the bills at the end of the month. And this is why I always tell people who, they come to me, and when I'm mentoring or whatever, don't give up the day job. Don't give up the income until and people think they can learn trading in 6 months, 9 months. You can learn all the principles of trading. You can learn technical analysis. You can develop a trade entry strategy. You can develop a trade management strategy, an exit strategy, account management strategy. You can understand all the psychology issues that come with fear and greed. But if you honestly think after 9 months you're going to be consistently profitable, I don't know, maybe some people do it, but I think the majority of people will not do that in 9 months, 12 months. I think you've got to be looking at 2 years if you really are serious about this.
yeah, I agree. I think, yeah, people can have systems and things, and as you said, back tests, but you kind of have to go through some moments and win and lose, and that all takes a toll. Like even like my own personal experience this year did quite well with prop firms, but then after a big win, had a massive blowout and almost didn't recognize myself. And 3 months before, I was thinking, oh, I'm going to be trading X amount of money in the next 3 months.
Yeah.
So as you said, if you needed that money, you haven't got any money. You know what I mean?
Yeah.
So yeah.
Big wins can be a killer. I've quoted in many podcasts for making this large sum of money in 1992. I thought I was a god, a trading god. And that was it for the next couple of years. I couldn't stand in the pit and just make what I used to make on a daily or weekly basis. No, swinging the bat, bang, bang. If it wasn't a 5-figure sum of money, it wasn't even worth getting out of bed for, and all this arrogance. And I didn't make anything for 2 years. And then I was like, shit, I'm running out of money. I need to get serious about this or my career is over. So yeah, when you make a big sum of money and you feel yourself thinking, I've cracked it, believe me, you've never cracked it. I'm 40 years in this business. I haven't cracked it. I don't just wake up and print money.
Yeah, it's interesting you say that, as soon as you think you've cracked it. I can't remember who I had on recently said that is, a real danger moment. As soon as you think,
Red light.
okay, I finally
Yeah.
figured this out. Yeah, I remember saying to my girlfriend, like, no, this is about 2 years ago. Like, this time I've really got this. I've got this now. I've got it pinned down and everything. Just, followed very quickly by many, many losses.
Yeah. Mr. Market will just slap you in the face.
Yeah, that's right.
Yeah.
I think
It's happened to me many times.
we talked before recording about that mental edge, because I think you've given a bit of insight, and we'll get into some examples. But as you said, those times when the market does slap you in the face is when that mental edge, or that mental, I don't want to say toughness, but maybe resilience comes into play. So I guess how did you start to develop that mental side? Because I know it's a big part of your trading.
Well, again, I did everything wrong to start with. I was greedy. I mean, who isn't greedy as a trader? The problem with trading is, okay, if you've got your own business, if you're an entrepreneur, let's say you own a restaurant, you know how much you can make on a good night, and you know you can't make more than that, or a good week, or a good month, or whatever. The problem with trading is you can buy gold right now, even if you buy a small amount, and there is an unlimited amount of money that you could make on that trade if it goes really, really well. And of course, this is what is in your mind when you do trades. If you don't control your thoughts, you're going to be like, "Oh, it's going up. It's going in the right direction. This is going to be a big winner. This is a $500 trade, or this is a $1,000 trade," and you're talking yourself into it, and you're getting excited. I have other businesses, and there is no excitement in that because I know what I'm going to make on those each month. And so it is all about controlling. And of course, things can get out of control real quickly. You can get greedy and you can get fearful. And you have to avoid those emotions. If you're feeling greedy, if you're getting excited, or if you're getting frightened, if you're getting fearful, if you're in a trade and you're thinking, if you're checking your phone, or waking up in the night looking at your position, if you run positions overnight, it means the size is too big. You're risking too much. You simply should not be having those emotions. You should be able to put 1, 2, 3 trades on, and you should be able to go walk the dog, go to the gym, whatever, and not even think about them, because you should be able to say, well, if these 3 trades lose, it doesn't matter. I can still wake up in the morning and not have any emotions that will inhibit me from trading. And it can only be one thing, because as a trader, trades will lose. And when you enter a trade, it can lose. That's why we all use stop losses. Or if you don't use stop losses, well, stop trading, because you've no idea what you're doing. And therefore, if you're worried about the loss, you're worried about the size of the loss, not the fact that the trade could not work. And great trades can still lose money. If you execute according to the process, plan the trade the plan, of course, you'll still have losing trades, but that doesn't mean they're bad trades.
Yeah, no, really good points. I like that analogy of, the unlimited amount of money you could make. I think that can really make people get away from themselves. And then, as you said rightly, that it happens quite quickly. It's not like sometimes you can just drift in and, as you said, P&L watching a couple of times a minute, and then all of a sudden you're doubling your size, or you're doing something you shouldn't do. You're deviating from the plan.
Or
Yeah,
you're
and
moving
now,
your stop loss further out, or you're not taking
mm,
profit at your predetermined target. You're running the trade too long. There are so many different things that you can do when you have a trade open that can screw things up.
yeah, as you said, if you can focus on that process and trade the plan, if that's your soul, if that's all you kind of do, it does keep you from kind of starting to look around and say, oh, I mean, how much size could I get on this? How much money could I make on it? When it's
Yeah,
like, well,
it should be
yeah,
robotic. Trading should be boring. My trading is
mm,
boring. I don't get a kick out of my trading. My numbers are small. If you looked at my trading account, you'd probably be like, "Wow, is that all you risk? Is that all you're trying to make after all these years?" But I'm lucky that I don't really need to make money anymore, and I don't suffer the emotions. It's robotic. If you're getting excited or getting fearful, as I said earlier, you've got to cut the size down.
mm. Yeah, that's a great line. Trading should be boring. Something
Good.
I've had to, painfully accept, because um, it was going to be this amazing thing. Then, as you said, as soon as you start to get those kind of emotions, that maybe you think it should be like probably in a danger zone. But, as soon as you have that edge from your process, execute the edge, and then that's kind of it. I think markets are very exciting, but as you said, the trading execution of that part of it, the kind of, you have, two aces, you play the cards, and that's it. You wait for it, and then you play it, and then but yeah, I think I used to conflate, markets with trading, and like, oh, I love markets. And then I'm like, trading, I'm a bit shit at this. When I started off, I was like, losing money with this. I think it should be all kind of intellectual and all this kind of shit. And I'm like, shouldn't, it's not about that at all. Eventually you realize. And
Yeah,
yeah,
well,
it's
you
just
hit the
something.
nail on the head. Markets are exciting.
Hmm.
That's the point. They are exciting. They're constantly moving, but your trading shouldn't be. So I think
Yeah.
you brought up a good point, and it's gone out of my head now. I hope it comes back to me, because you said something really interesting there. But yeah, I think everyone gets into trading, maybe without even realizing it, for the excitement. Because what is more exciting than sitting in front of a screen and making money pour out of it?
Hmm.
It doesn't feel like you're working. It's not a
Yeah.
real job. I can click some buttons, look at some flashing numbers and a pretty picture with some prices on it. If I can do that, and I can suck hundreds of dollars out of it each day, or maybe thousands, it feels like free money. And of course, you're going in with an excited approach. And if you're going into trading for entertainment, fine, but just be honest with yourself. I'm doing this for entertainment. It's like going to the casino or playing a slot
Hmm.
machine. Don't pretend to yourself that you're a trader, because if you're a trader, you have processes and rules, and it's just not. It shouldn't be exciting.
Yeah. I love that point, because, yeah, people come in thinking it's kind of a money printing machine, kind of put up your legs. Then they lose money, and then they think they need to work harder. And in reality, it's not the harder work. It's not an input
Yes,
output kind of sport. It's a bit like,
exactly.
and then they go down the wrong route again and lose even more money. And then eventually, if they stick around, they come back to this conversation type of,
You're so right. With trading, less is more. Sitting on your hands pays. I'm actually partnering with a company called Smart Charts, and the whole basis of what I'm doing with them is one trade a day, which sounds absurd. If you're marketing a service, you should be like trying to get people to trade as much as possible. But I know that isn't going to work. So if you okay, one trade a day is probably over exaggerating the minimalistic element of trading. But if you go into trading with a realistic approach, like, okay, I'll just try and do one trade a day. If I can get 3 days where I win and 2 days where I lose, I'm going to come out with a profit on the week. And that is scalable. So this is the whole basis of what I'm doing. Just start by focusing on doing one good trade a day, following the whole process, and learning how to find a trade opportunity, execute an entry properly, place a stop loss properly, have your risk reward, exit when it hits the target, and then boom, bank it tomorrow, come in and try and do the same thing. That's a real nice way to learn the process.
Yeah, well, I didn't know that was what you were doing with smart charts. It's yeah, and it completely mitigates that thing that people tend to do, which is over trading, especially when they start picking trades just because, you know, heard on the news Europe is shit, sell euro dollar, you know, and now if you have one choice, then you have to cherry pick, which is important. I think you don't have to just take
That
trades for
that
the sake of.
that is the key to my edge. I don't go looking for trades. I do my analysis. I just analyze. I throw fibs on there. I throw trend lines on there, and I look and I look and I look. I'm not like thinking, what should I do in euro US dollar? Should I buy it or should I sell it? I'm not doing that. I'm like,
Hmm.
is there a trend? Is there a support level? Is there a resistance level that I would trade? It's a different approach. I'm not looking for trades. I'm just doing technical analysis. And when something jumps out at me, I'm like, I need to do that. I'll stick it on my trade sheet.
That is a really, really important point, and it really hits home to me, that point, because I definitely struggle with approaching something with a bias, especially if you're if you're keeping aware of news and narratives and all this kind of stuff. You might be looking at Eurodollar, and I know it's someone listening to this might say, "Oh, obviously don't do that," but it creeps in, you know,
Of
and
course it
that
does.
approach of, yeah, it's just hard. Sometimes I fucking catch myself and I'm like, you know, you wanted to be long euro, and now for some reason we're long euro Aussie, and I'm like, I don't even need to trade euro Aussie, right? I don't know, it's just, you know, but
Oh,
you just
I've
ended
been
up
there.
there like, how the fuck am I long euro Aussie? It's like, I don't even trade euro
Yeah,
Aussie.
yeah, yeah.
And yeah, but I mean that pivot to, you know, no opinion, I'm just analyzing, I'm not
Mm,
looking for anything. I think that's
mm,
really powerful. It's something I'll definitely
mm.
stuck in my mind now, actually. So it's really
Yeah,
helpful.
because when you're starting out trading or when you're trying to build your, build your account, you feel forced and compelled to trade, and it's just such a bad approach.
Hmm.
So that's why I'm really into this one trade a day approach. We'll see how it goes.
Very good. Okay, you want to jump into some charts? I know you've got some stuff prepared for everyone,
Sure.
so let's walk through a couple of
Yeah.
examples of your trades and how you bring things together.
Yep.
Yeah.
Okay. So we are looking at cable, pound versus the dollar since the beginning of the year, January, and you can see that we have been in a really nice bull trend recently. It's reversed. So actually, this is I think this is a head and shoulders pattern that we saw. It played out
Hmm.
pretty much to the target, so that worked quite nicely. That's one of the things I do. I look for patterns, but you can see. Hang on. You can see how we had the dip, new high, and a dip. And this dip is what created the shoulder to the head and shoulders pattern. Now, I'm not I haven't picked this example to talk about head and shoulders pattern, but it's interesting that we got one. It's the fib levels for me. We were in a bull trend. We dipped to the first main fib level, going back here, which has taken the complete low to the complete high. And we had a 23.6% fib at around 113.90 here after the peak. Now, I had to buy it there because it was a good fib level and we had previous price action that backed it up. I would have liked something a bit more. I would have liked a trend line or a moving average, but we were in such a strong trend, I had to do the trade. So we got in and it worked. Actually, when it got through 135.30, I thought it was going to continue higher, but we reversed. Okay, fine. We have a trailing stop. We get out of it, not a problem. I tried a long position again on the retest. I had to, because it had held twice. We might be about to start a sideways consolidation. Okay, it broke. We got stopped. But that's fine. I don't mind that, because I assume we're now, well, there is a strong chance we will now go to the next support level. And that's exactly what happened. We went down to the 131.40 area. So we jumped into a long position there. That worked and we went up. So pretty simple. I think we then formed a bull flag. If you look at these two downward sloping trend lines, I think that is a bull flag pattern. We've just broken above it with a nice strong green candle. So I think the bull trend has probably resumed. The question now is whether we find resistance at this longer term upward sloping trend line, which has been in place since January, and turn around again, or whether we break up. But that's basically what I do. Pretty simple.
So that level, so once we broke through that kind of head and shoulders pattern, did you buy that? So you mentioned at the start of the call that you hit the level directly. You don't wait for confirmation or anything. So that fib level at 0.382, did you have a limit order on that
Yes.
level? Okay. And was there
I did
anything
the first
beyond?
time and I did the second time. But the second time I was aware that we had a potential head and shoulders pattern. But I've seen so many head and shoulders patterns fail that I wasn't going to assume that this was going to work. I thought, it could be the beginning of a sideways consolidation. So I had to buy it there because I'm a trend follower and I know it's a good support level. And I wouldn't normally short on a break of a support level in a bull trend. I would wait patiently, hoping that it would hit the next support level and I would jump in. But in this case, we did actually short it because of the pattern. So I was trading against the trend, which is not one of, which is against my rule. But in this case, there was a pattern to trade.
Yeah. Well, I mean, what was your stop on that level? Because that looks like it's literally just ding the level and just ripped
Here,
higher. But this is the 4 hour
131.40. Yeah.
chart.
This is actually the daily chart.
The daily chart. Okay.
Yeah. You can trade off the daily chart even as a relatively short-term trader. You have to know where these levels are, and you definitely won't see that on a 1 hour chart. You probably won't even see it on a 4 hour chart. So you have to be aware of the daily chart as well, even if you're just running positions. As I say, my average trade is risking 30 pips to make 60 or 90 pips. So I'm not I'm not a scalper, but I'm not a long-term swing trader, but I still have to look at the daily chart.
Yeah. And so, I mean, so you hit the fib level on the kind of longer term trend is bullish. And do you measure the longer term trend on the direction of the chart? I know you've got some moving averages in there, but I know lots of people have different ways of saying something's in a bull trend or something's in a bear trend. And some people just eyeball it and say it's going up, so it's bullish. I mean, what do you kind of use for that?
Trend lines and moving averages tell me what the trend is. Now, we broke the moving averages as well here. So that was another reason why I thought, okay, I'm going to go with this head and shoulders pattern. We've broken the moving average. But I didn't assume that this was a bear trend. I just assumed we would play out to the measured target of the head and shoulders pattern. Now, we could have gone down here. We could have gone to the 50%, but I don't know. I just had a feeling it wouldn't happen. We had a previous swing low at that fib level, and we had this upper trend line. And I thought, I wonder if we'll get something of a parallel trend line to form a flag pattern. You're guessing, of course. It's probabilities, isn't it? Trading. We don't know anything for sure.
Yeah, no, 100%. And I think that's a really important point that, when we have pullbacks in strong uptrends like this kind of bearish dollar narrative kind of type trend has been really rooted for quite a couple of months now, I think. Just because something pulls back a bit deeper does not mean we're pivoting to a bearish trend. I think that's a point that especially people that like to short get a little bit excited and then they just get destroyed because they don't have, again, the experience when you are just looking for the next level to buy. Because I think on a chart like this, you'll find what you're looking for unless you have those rules that you have, so you'd start to get short there when your rules say, so if you didn't have the rule to not short in an uptrend, you'd find a level to get short. But because you're looking at this as an uptrend and you have your fib levels, you're buying support, whereas I think some people, they're just going to want to short, or as soon as they think it's breaking down, they think it's turning around and they start shorting. But I think it's a little bit of wisdom to be like, okay, what are the probability, or what's the probability this whole dollar short move or this whole 2-month trend is turning around right now? It's a little bit unlikely,
Yeah, well, I used to, the thing is when you first start trading as well, you think markets either go up or they go down. The thing is, the end of a bull trend isn't usually a V-shaped, an upside down V shape. There's usually a consolidation phase. It could turn out to be a head and shoulders pattern or a double top or something, or there may not be a pattern. But I would say more often than not, actually. I've got no statistic to base that on. It's just my experience. But I'd say more often than not, you have a sideways consolidation, and that can go on for a very long time. Markets exist for people to transact business. And when markets are moving up or down, there is a vacuum. Buyers are chasing the price higher in order to find sellers, and vice versa. What financial, or at least if I owned the exchange, I'd be happy seeing prices being stable in a consolidation phase, because that probably means business is being transacted and volumes are being done, because buyers and sellers have found a place where they can agree on a price. So I don't know for sure, but I think volumes look pretty good in sideways consolidations. Of course, as you get to the end of it, the volume tapers out, and then there's a vacuum, and the market will vacuum up or down. But I suppose the point is, don't expect that when a bull trend has been broken, that it's going to turn into a bear trend. That's not necessarily the case. Probably more likely than not, it'll either be a correction or a consolidation. Now, if we'd broken that 38.2% fib, I would seriously be thinking, okay, hang on, we know this could drop more significantly now, just from the previous price action, the way the market had moved up so quickly.
Yeah. Okay. Is that a kind of a line in the sand maybe for you, combined with the trend line break?
It is a bit.
38 too. Yeah. Okay. That's good to know. Okay. So in terms of the kind of additional support levels, do you ever draw support levels yourself, as in different areas on the chart that maybe got a reaction, like discretionary line, or do you just stick to fib, maybe a fib within that fib and a trend line?
I just stick to my fibs, but I will only respect the fibs. Well, I will only trust the fibs if they are respecting previous price action. And if you look at the euro chart, I don't actually have it, but the euro chart, the fibs are not actually the fibs are not respecting the price action, and so I'm not trusting them so much in the euro. This is actually sort of the best example that I could find right now of a tradable trend. But I do think people should put horizontal lines on their chart, and they should identify areas of support and resistance and leave them on there for future reference as the market moves forward. I don't do it myself, but I think it is good practice.
Okay. That's a good insight, because I don't use fibs as much as I used to, but I haven't heard someone say, you'll map out a fib, and then if again price is reacting to the levels in the fib, you would trust that, and if it just started moving through those levels, you wouldn't trade off it.
Yeah, it's supposed to give you a roadmap. I call it a roadmap, and you can see on this chart that, of course, when you look back at what the previous price action, does that match up quite nicely with the fib levels that you've put on the chart? And in this case, I really think it does, and therefore I trust the fib levels. Yeah.
Okay,
but it's not always the case.
Yeah, and so if it didn't line up, would you look for another swing high and swing low to draw fibs off, or do you just you've got the keys?
No, I wouldn't actually. I don't believe in just fitting things to make it look nice. If it doesn't, no, yeah, it's a good question actually, but no, I don't do that. Trend lines, you kind of have to do that a little bit. Trend lines are trial and error. I guess I will often. Sorry, carry on.
No, I was just going to say, I guess fibs are, as you said, trend lines. There can be multiple ways to draw it, but fib, as long as you can have a way of saying this is the swing high, this is the swing low, they're kind of set for you. There's no discretion except for picking the range.
Yeah, in that case, you can do what you suggested and just draw your own horizontal lines on your charts to highlight the support and resistance levels.
Yeah, I'm murder for that, because I'll just find some time frame. I'll find a level if I've come in with a bias, and I'm working on that at the moment. I wouldn't say it's as bad as it used to be, but I think I'm much more aware of the fact that you can find a level, and you really need to get a lot of the stuff you're talking about here. I mean, the identifying the trend, thinking in probabilities to see, is this just a pivot point? Is it a quick sell off, and the higher time frame trend is going to continue? I think that kind of thinking is much more reliable, I think, than coming in with a pre-existing idea, thinking you're going to tell the chart where the level is.
Yeah,
I much prefer
so
your approach.
We do though, because we do all have biases, and it's even worse if you've got a position that's already open, because then you're looking for confirmation. You've got confirmation bias. You're looking for reasons to hold the position. You're not being objective.
Yeah, great point. Yeah, I'm glad you brought that up. I remember, I think Brent Donnelly had said before, he was an FX trader. He's convinced that his IQ drops like 80 points as soon as he's in a trade, because it's super hard to, when you're in there, it's like, you're starting to see different colors and, strange
That's
things
why
happen.
I don't believe in screen watching when you're in a trade, because you will have your emotions going. You will have that fear and greed thing. And then you're just looking for reasons either to stay in the trade or to get out of it. I'm a real believer in plan your trade, trade your plan. And then once you've done that, you walk away.
Yeah. And if you throw in that P&L in there as well, when you're watching that, then the emotions can really get going.
Time.
Yeah. Okay, very good.
And the problem for me is, I'm sure for everybody, the losses hurt. The losses hurt way more than the pleasure you get from the wins. Do you know what I mean? Like, if I lose $500, I'm like, damn. If I make $500, I really couldn't give a monkeys. That's the problem with trading. You kind of never really feel satisfied in some ways because of that. And that's another reason why you need to have targets. You need to have targets for the trade. You need to have targets for the day. You need to have targets for the week. One of my big things is, if you've hit your target for the week by Thursday, don't feel guilty about taking Friday off. You have to find ways to feel satisfied with trading, because like we said at the beginning of the conversation, there is an unlimited amount of money out there that you want to get your hands on. And if you don't control that, you will get out of control. So you have to say, right, I've made X amount of ticks this week, pips this week, or whatever. That's great. That was my target. I should feel satisfied now because I've achieved that target. So I'm going to take Friday off, or whatever the reward is, buy myself an ice cream. You have to do that, because otherwise the mentality can be, I should have run that trade longer. I knew it was going to keep going. Why did I get out of my target? And that's when in the next trade you're thinking, no, I'm going to run this further, and it all starts to fall apart.
Yeah, very true. It happens like so quickly, and you don't even realize, and then all of a sudden you're the wrong mentality altogether. I think, those 2 points, having that ability to walk away, a bit like someone in a casino is ready to walk away at some point, but how many people do? Was there anything else you wanted to run through?
No, I think we've covered quite a lot of ground there, actually. Well, I hope people have found it useful anyway. I think we got quite insightful, I would say, Con.
Yeah, very a little bit of philosophy in there on a Wednesday. Yeah.
I do provide daily technical analysis based signals through Telegram, which I think are pretty good, because I've been doing it for 20 to 25 years. I started out providing these signals from investment banks, actually, Deutsche Bank, Morgan Stanley, Merrill Lynch, that kind of thing. Now it's purely retail. But I enjoy doing it. And as part of my signal service, you get to talk to me for free whenever you need to. So if you're struggling either with the signals or with your own analysis or with all the trading topics that we've brought up today, you just call me on WhatsApp, say, hey, Jace, I need a chat. So I quite pride myself on the fact that I'm accessible on that. And then I also have training courses from as little as £100 a month. So please do look me up.
Yeah, I think that is a big differentiator between you and a lot of people, is that complete access for that price. Like, I'm thinking if I was doing something like that, I'd be charging a lot more than $100, and I have a lot less experience than you do. So,
do you know what?
So I think
I'm surprised that so few people contact me. My WhatsApp, my personal contact details are on my website. Anyone can go there, even if you're not a subscriber. you can call me, you can send me a WhatsApp, and I include myself for free with my courses and my signal service and everything. And I'm so surprised that few people actually reach out to me. Maybe I'm an intimidating person or something. I don't know, but anyway, I think it's important. If you're given the opportunity to speak to someone who has a lot of experience, you should grab it.
Yeah, big time. Yeah, and I'd recommend that to anyone, especially if you're starting and you have those questions. Have someone at the end of the phone is going to be massive. And unfortunately, it's like people come to trading thinking they can do it, and then they just can't. They don't know what it's about, and they think they know what it's about. And the biggest thing is having someone there that can help you. So I think, yeah, completely second it. Would recommend people to try you, or at least give you a text or see your website. If I know you have
Yeah,
different offers for different people at different levels, so check it out.
yeah.
And thank you so much for your time. I really appreciated it, and I got a lot out of that as well. I'm always selfish with these sessions because I was treated as my own one-to-one with all these great traders, right? So, but thank you.
We always have a good chat.
Hey guys, if you're still struggling with your trading, I've made a quick video on how to create a sustainable and scalable trading process. You can watch it here.